Hey guys, so today we'll be going through one of the craziest thing which is happening in the global financial world, and has something to do with Japan. I don't know if you have seen the recent news, but Japan yen has been in headline for quite some time, and it's staggering. Like think of it like it's something which varies the entire global financial market system. And this is something which I wanted to give a focus more and understand what is actually happening in the entire depth of the market. So let's go ahead and understand from a perspective, like a Japan perspective, what is actually happening. And trust me out, stay with me till the end, and you will try to like if you stay with me till the end, you will understand various concept which involves inflation, deflation, repo rates, right? Bond and yield rates. So these are different segments which you will be able to understand and have a better understanding that how does government functions effectively, right? And yep, let's get started. So eventually, I don't want to keep a very boring presentation where I just put out some points, but eventually, what I want to show you over here is that let's say that this is the consumer price index, or we can basically say that this is just an inflation index which is for the Japan, right? Now, eventually, I wanted to start it a bit back from 1991 because effectively that was a period where this thing, the entire story for Japan started at this particular time, right? So, just to give you a brief background, before 1980s to 1990s, their economy was just booming. Think of it like that. They were enjoying hell amount of stock were growing. The Nike 225 was going at a very good pace. The real estate market was growing at a very good pace. So everything was doing extremely well. But all of a sudden, this was something which is not liked by the Central Bank of Japan, right? Because now the prices of stocks, or let's say that real estate, had gone to such an extreme level that was difficult for common people to actually go ahead and buy those things, right? So think of it like a someone has to keep check on the prices. Otherwise, people will go just berserk and they will just start buying or like start raising up prices at a different level, right? So eventually, at 1991, the Japan government stepped in. They had put up inflation. Let's say that it was 3% at that particular period of time. What eventually happened was that at that particular period, the central bank decided to raise the interest rates. And whenever there is a raise in the interest rates, what eventually happens? The thing next to the interest rate is that they want to calm down the inflation itself, right? Because now the prices have gone to such more difficult, such extreme levels. They wanted to calm this thing down. They wanted to pacify this thing. So best thing to do over here is that you raise the interest rates. Now, when you raise the interest rate, the borrowing becomes much more difficult in economies, right? This is true, right? Because let's say that you go ahead in the bank earlier, you were borrowing at a rate of let's say 2%. It was good, right? Let's say, but now let's say that the interest rates have been raised to like 6%. Now, with 6%, the borrowing will actually become more difficult for the bank for any business operation, right? So that is the exact thing which Bank of Japan eventually did, or the Central Bank of Japan basically did at that particular period of time. And that is quite visible for from 1991 to 1995, right? But there was one unique thing which happened during this period, right? The inflation actually went to negative. Now, and I mean, just think about it. The inflation went to negative. We have heard inflation always from a perspective that okay, inflation is rising from 1%, 2%, 3%, and whatnot. But for the this period of time, the inflation went to negative, and that's where we call it deflation. Now, think about it. Think about it. This is a particular pen, right? Now, let's say that in 1993, the cost of this pen was around 10 rupees. Now, the in 1995, the cost actually fell to let's say 5 rupees, and the cost just keeps on decreasing. Now, from a consumer perspective, you might think that hey, is this a good thing? But but I would like you to take a pause and understand that do you think deflation is a very good thing or not, right? And this becomes an important topic for our discussions over here, because eventually what happens is that deflation is very bad for the economy. Why? Because when the prices of the goods start decreasing, what eventually happen over here is that the company cannot make profit out of it, right? Imagine this is a pentonic pen. Now, if I were to pay 5 rupees for this pen, now eventually what is happening is that the company is actually making a pretty less profit on this given thing, right? Now, if profit decreases, what eventually happens? Wages actually start decreasing, right? Your growth does not happen, right? This is one of the important factor. What is the second important factor which eventually happens? The second important factor is that As soon as the prices start decreasing, people always delay their buying. Now, the best example which I could take over here is that, I don't know, again, the stapler, because I'm bored with pen now. So imagine the stapler. You thought that, okay, maybe tomorrow I will buy the stapler, but let's say you know this thing that the prices keeps on falling. So what you might eventually do is that, hey, what I can do is that instead of buying it tomorrow, I can just delay my purchase. Or let's say that you want to purchase a MacBook, right? And let's say that you had planned your MacBook for July, but or let's say for May, but you slowly understood that the economy is going where the prices are just decreasing, and what you do eventually is that you delay your buying to December. So this is a very bad thing for economy, right? Feel free to put up your opinion and put up your thoughts. What do you think about it, right? But eventually, the government or the Ministry of Finance in Japan actually understood it, and they raised the consumption tax rate from this particular period from 1995 to 1997. Like this was the period where they raised the consumption tax, and basically, what you're eventually saying is that the tax on this good has now started to has been raised up. Like earlier, like say this good has a 3%. Now it was raised to 5%. So eventually, the prices of this good should increase. And let's say the basic idea is that the inflation should the, like we should see the consumer price index as it is written over here. It should actually go up, but that didn't happen as expected. So you can see there was a temporary spike which eventually happened during that 1997 to 1998, and eventually the it just fell down. Now you might think that, hey, isn't taxes the way, one of the way where the government thought that this model would work? But that's not all about it, right? This is also about, this is the point where economics starts making very it becomes so confusing that you think that these interest rates, these monetary policies all influence our the spending thing, right? And somehow it makes sense in the inflation bucket, but eventually there is a lot to it, right? If there is no real demand, if there is no real demand of this particular pen, then who's going to buy it? So eventually same thing happened. The prices start, I mean, eventually when you raise the tax from the particular period of 1995 to 1998, like you have raised a tax in consumption tax rate. What eventually happens now is that from that particular period, okay, the prices increased, the inflation started to rise, but that is just a temporary thing which the government tried to do. And after that temporary thing, when there is a no real demand growth, let's say that even no matter what you do, the things or the prices will return to its original level. And that's what exactly which happened, right? There was no real demand, and the inflation which was stable, it fell again negative. And Japan had a pretty difficult time to deal with these things, right? So one of the most important thing which I want to discuss over here is that Japan had been struggling for a very long time with deflation, not inflation, but deflation. Remember it. They are suffering with prices of the good falling. Pretty amazing. Now, eventually, you can see from a period of 1997 to 1999, or maybe 2001, 2003, the rates were pretty much negative. So imagine year on year, the prices of goods are just following. It becomes very difficult. Imagine a place where the prices just stay constant, right? There is no change. In fact, the prices just keep falling, and somehow the economy is functioning, right? Economy, there is no thing of recession. There is nothing like that. There is no panic among the people. The people are just enjoying it. There is no lot of protest which is happening. Pretty good for a economy. But now things started to get interesting over here, right? Now you might remember this graph from 2007, right? 2007 was a crazy time. Why? Because it was a time of housing bubble, right? What eventually happened during that, we all know, right? People were spending recklessly, right? Because the housing market was at an all-time cheap. I don't know how that happened, but eventually, what do you, the thing which happened between the period of 2007 to 2008, eventually the inflation just kept on rising, right? Somehow these people got too much money during that period, and unluckily I was not among them, and I missed this rate. I was in school. But anyways, let's go back. Eventually what happened, inflation started to rise again, and this was a real, this was not an artificial, this was real. One more thing, but yeah, let's call it for later. But eventually in the inflation kept on rising, and 2008, or let's say 2009 happened. Between that period, there was burst, the bubble burst eventually. And when the bubble burst, what eventually happens? Things go negative, and it went so much negative. Why? Okay, you might ask me why the things went negative during the period of 2009. because eventually people got too much afraid. Think of it like earlier you were in a bubble. You were thinking that, hey, the economy is booming. So everyone is just spending their money recklessly. They think that, okay, the housing market is pretty cheap. I will go buy this. I will go buy that. So the price of the good automatically starts increasing, right? And it was just not a global, like, it was just not restricted to the USA itself. It was it was spread across different economies. And this is why Japan economy is one of the important economy, which I wanted to study as part of it. But eventually, I hope it makes sense to you, right? Eventually, what happened after that was that in during the 2008, 2009, there was a burst, and eventually people were like, "Oh, someone, we are all busted." What do you do when economy slows down? Like basically, everything if everything start collapsing, what do you eventually do? You say take a pause and you stop spending your money. When you stop spending your money, prices of the good automatically falls. Think about this pen again. Remember a couple of minutes back, so now people are not buying this pen, and for the company to sell off this pen, the company might, let's say that if there might be a situation, the prices of the pen will start falling at a very good pace, and that's exactly what's happening. So I don't think so. Pen is a very good perspective to tell you this thing. The more better thing would be housing, or you can say any flats or apartment as we call in India. So eventually, let's say that you went to go ahead buy houses back then after a period of 2009. It was a very golden period. But as we say, things started to improve. From this period of 2009 to 2013, things started to improve. And as you might see, that again, so I will tell you this thing. Japan had been struggling with the deflation for a very long period of time. And again, during this period, what eventually happened was that it was again going to negative, right? Because now everything had returned. So this was a post-recovery scene of the global financial world after the bubble had busted up, or the global financial crisis was pretty much on a recovery phase, right? So eventually that happened, and between 2013, the rates had already fallen to a negative, right? Now, there is one important thing which I wanted to say to you, right? Go to any central bank, like in India, or let's say we have RBI. In USA, we have Feds. In Japan, we have other things. So they have a target rates. Like they want the inflation to be between the rate of 2% to 6%, because that rate is actually very healthy for the economy to function. That is the important part of this thing, right? Because eventually what happens is that between 2% to 6%, somehow your economy functions well, right? Inflation is good. The thing is that you can argue with me over this fact, but you cannot have an economy which functions well over some 0% or 1% or like so around rate inflation rate, right? It becomes difficult for companies to also make profit over here. So that's why inflation is actually good for the economies. It helps keep the economy cycle running, not just particular companies running. It helps spend. It also help keep track of the spending. It also prevents it at the same time. Somehow it functions very well, and I will take you through the whole ride of it in this presentation. So far I have not explained you things around, like I have not given you ideas about, hey, how this functions, how this that functions. But eventually, as I had already told you, that Japan had been struggling with negative interest rates, and what did the government do? It does what it does again. It raises the consumption tax rate, and this time they hiked it up to 8%. Now the thing is that with the 8% again, there was no real demand, right? There was no real demand. And again, the inflation actually rose to 3 point, maybe 3.5%, or it moved beyond 3%. The government felt happy for a bit period. Then it realized, hey, I think so we just messed up. And the prices actually started to fall after that. The right. And we are back to the same question again. Deflation. And that exactly happened between the period of 2015, where now we are facing a deflation over this period of time, right? So Japan came up with a crazy idea. They introduced two different policies, which is called YCC and qualitative and quantitative easing policies. And the main idea was that the Japan government they wanted to achieve a target of 2% of inflation, right? But it never it happened, but it had happened with a very weird thing. So I will tell you the YCC concepts. I will tell you about the quantitative and qualitative easing policies concepts, but they are pretty advanced. And let's keep it for the later part of the video. But the gist of it is that they wanted to control the interest. They wanted to control the inflation rate. Sorry, they wanted to achieve the target of 2% inflation rate, right? So that's why there was a couple of things which they did. Now After that period of time, they later decided that, okay, nothing favorably happened for them, right, around these period. Nothing favorably happened because, again, Japan is also facing with an aging population. That was one of the most important factor. And there was actually no demand growth. The people, it was also linked to the people habit somehow, I don't know, that people were not spending or chasing goods that much, and eventually the inflation rate returned or to its negative point, or let's call it deflation at this particular point, right? And now we have the September 2022, where the inflation automatically burst at up to 3%. You might ask this, did Japan actually raise the income consumption tax? I'm like, no, they did not. What they what eventually happened was that, I will give you some brief background. Japan is a country where 90% of the energy is actually imported, right? 40% of the food requirement is imported. And that is one of the most important factor which you need to realize. Between the period of 2022, what eventually happened was that now the the you remember this Ukraine war? Yep, that exactly what happened during that period. And I think so, yeah, this also explain. So okay, I'm not saying you that I'm the interpreting this graph correctly, but there are some instances where I'm putting up here. So 2022 was okay. This I'm correct about that. In 2022, there was a Ukraine war and there was a global oil supply crisis, and eventually Japan, which imported 90% of its oil, it faced an issue because with the rising cost of the oil, which I don't know, moved around way above $65. I think so, $85, $90. I cannot even remember at that particular period of time. But it increased, and what eventually happened was that when it reached a very good level, the inflation automatically starts to increase. Why? Because now it becomes very difficult for the companies to function with the rising cost of the oil. And the prices of the goods automatically start to increase. And then that's what we call inflation. So, couple of one more thing. This period, actually 2019 to 2021, I think so we all can remember. This was a period of COVID, right? What eventually happened in COVID, there was a no real demand growth. So what eventually happens when there is a no real demand growth? We are back to the same equation, bitch. Anyways, let's go ahead and uh, move to the next thing. So this is a funny thing which I wanted to talk to you, right? So right now I had showed you a pretty decent view of the Japan between 1991 to, let's say, 2021. But I wanted to show you something which is actually quite interesting. The BOG had set up rates. Like there are something called policy rates, right? In India, I don't think so. People can relate to this concept of the policy rate, but if you know about the repo rates, this is something which is very similar to the right. And what eventually happened was that uh, the Bank of Japan, let's say that they had set up a certain rates. The rate was around 0.75%. Are you kidding me? 0.5%. So I can just basically think about it. If some bank has set a rate of 0.5%, they're basically telling me that take this money, go spend it somewhere, put it to something useful. And that's exactly what Japan did. They kept the rates so much low that with the idea that people will start taking that particular money and they will start spending up in the economy, and somehow the inflation should rise. And this was the target in CPET, which they had to achieve eventually with all of the things which they were trying to do, right? So again, these things do not matter. And I think so. I had already explained you what happened between the 2008 to 2009. And again, we are back to the consumption rate. And between 2016 to this thing, I told you they had introduced some kind of policies. Back to it. So one thing which I wanted to show you was that in 2016, they had implemented a concept of negative rates. Negative rates. So basically, they're telling you that if you keep your money in the bank, you will be charged. That is the concept of negative rate. The rates were not extremely high. They were around like minus 0.1%. But the message was clear that you do not want to keep your money in the banks. You need to spend that money outside the market. And the main idea is that they will, this will help to achieve a target of inflation, which is of 2%, right? Now, there was one more thing which I had kept it, but I think so it's a good time to explain it. So I would like to explain you about a bit about the bond market and how it functions. In the bond market, it's usually when you look at the governments of when you talk about the Feds, when you talk about the government of India, we have a bond market which is self-governed, right? There is no single policy decider which sets up an immediate rate for it. The market decides the rate for it, right? Based on the currency stabilization, based on the how the country is doing, based on the debt of the country, based like which again falls into the category of stabilization. But the idea is that the bond market is something of its own. Think of it like it's like a stock market, but it eventually not for the norm, like it's can be issued for the normal people, but it has a market of its own. We have where the government tends to auction its bond to a couple of investors. It might be bank, and in that given auction, people will decide the yield, right? Like eventually the market will decide the yield rates of that, the right, and that's how eventually it functions. But Japan actually did a very unique thing over here. In 2016, what they came up with a unique idea that we will tend to control the short-term rates and the long-term rates. And this was something which is very unique in the entire world. No one has experimented with this concept, but Japan was the one which experimented with this concept. And this is something which actually blows up my mind. Right now, the idea was that they were telling that we will ma- like if you people, we gonna decide what the yield rates are gonna be like, right? We are gonna decide. So the thing is that the yield rates, I mean, just to give you a perspective, when I was talking about the currency stabilization, the different concepts, I was also tending to explain you that if there is a real inflation which is there in the country, when you fix a yield rate, it automatically hides it. That is the most confusing part about it. When you fix the yield rate to, let's say, 1%, 0.1%, you automatically hide the fact that market can decide the yield rate for that government bond, and it just provides a better stability, right? And that's what Japan tried to do. But in 2022, as I had earlier said, that Japan is a country where it's trying to import most of its energy requirement from different countries. It tend to suffer from a problem, and that was the most annoying part. But eventually, it we achieved a target of 2%. That is the most important part. But it may come had it may have come down due to the Ukraine war, but eventually we did achieve the target, and there was something which uniquely happened at that particular period of time. So Ah, yeah. So eventually, now with everything, with all the information said to explain you, I'm going to explain you something which is very unique, right? What eventually happened over here is that when you set the interest rates to like 0.25%, 0.1%, what effectively happen is that you are basically telling that what investors, or let's say what some people came up with the idea was that, which was already being started well way beyond around 2012 or maybe 2016, no, not 2016, around this period, that people started to take money from Japan, right, at a very low cost, at a very low interest rates. They took yen at a very low interest rates. They converted that yen into dollars, and they started to invest in the US bonds, stocks, or some assets. Why? Because of this. Think of like this, right? You could basically come up with a concept, like you could basically do this. You can take borrow money from the bank saying that, okay, I want to spend the money, but bank does not govern the fact that where you can spend the money. And this is where people got very smart. They took that money at a very low rate, and they started to invest in the US stocks or assets or bonds, or I don't know what not. So eventually, why did they invested in US? Because US is a people actually look US as a pretty stable economy, right? They think that it's too big to fail at this particular period of time, and they are kind of bully in this given world. So people think them as a dominating player who has a pretty good um, presence in the entire global financial system, and that's what exactly which happened over here, right? So just think that when in during these periods, like you can just basically profit from just a simple arbitrage. You can take the money from, yeah, Bank of Japan in yen, convert it to dollars, and invest in some treasury. Let's say that if we had invested in 30-year treasury, so basically you will be only like a 4% or maybe 5% interest rate. You see this gap of 4 to 5% interest rate, and that's exactly what people started to do. That's where yen started to become problematic for the people. Why? Because yen started to become weakened, right? Think of it like, if Japan Bank of Japan is not giving you the interest rates, people will just move their money out of their financial systems. They will start investing in some foreign assets, and that's what exactly is happening over here. So eventually, when you see the rates around 4 to 5%, which is 2.5% to 5%, which is exactly happening over here, what happened over here is that eventually down the line, between the 5% rate, people started to benefit from the simple arbitrage. But at the same time, you remember this thing, people were selling yen, right? People were selling yen. And whenever you sell yen in terms of dollars, you are weakening yen and strengthening dollar at that particular period of time. So by 2016, Japan had already become a largest asset holder in the US, right? They were holding pretty much largest asset holder in treasury of US, right? So eventually that particular thing happened, right? But there was a bigger question to answer. I'll tell you why. I had earlier explained you that Japan is a country where 90% of its energy requirement is imported, and so is the 40% food requirement, which is imported. And this is where things get funny, because Japan is a country where eventually their percent of GDP, like if you go over their debt to GDP ratio, you can see that it has almost touched around 265%, or it has shooted well beyond 250% back in 20. And this is something which is at a very staggering figure. So if I were to just show you that GDP, debt to GDP via different countries, you could basically see over here is that, right? I will just show you with the debt to GDP ratio by country. So you can see all the dark blue countries. So basically, they are the countries which have a very high amount of debt, right? And you can see Japan has a very high amount of debt. Now, Japan. So the real question is that, okay, this is one more thing I didn't show you. So I wanted to show you USD versus yen, right? Because this is a very funny concept which actually holds a lot of value for me. So why this is important? Because eventually down the line, what needs to happen over here is that, okay, this is not the full chart. Give me some time, right? Okay, this is too big. So currently you can see is that earlier when yen, so this right side just indicates the value of yen, and it is against dollar. So earlier, let's say that you could in 2012 figure of time, you could 76 yen would convert to $1. But now we have reached a point where 157 yen converts to $1. And this has happened because people are selling their yen to pocket the differences and invest in the US treasuries, bonds, or like stocks or whatnot. So eventually this happened. And Japan struggled with it. Why? Because it was importing most of its thing. And this is very bad for the economics if you think about it. So what is it? So you might think that, okay, you can take a pause over here and you can think for yourself, what is the most immediate thing which you can do over here? Right? The best thing to do over here would be that just raise the interest rates, right? Just match the US interest rates and people will just stop taking money at a cheaper yen, or basically a cheaper interest rates, right? But it's not as simple as that. That is the most, now we have come to the dilemma of Japan. They just cannot raise the interest rate from 0 point maybe to 5% to 0.1% to something which can match up the USA. Because think about it, if they raise the interest rates, had issued bonds at the government has issued a bond at a 0% like interest rates at that particular period of time. Now it is required, if you raise the interest rates, think about it, now they have to pay their money back. They have to pay their money back with the new interest rates, and that is bad for a company, for a country which is already laden with debt around 250%, which I had showed over here. So for the people who still do not understand this concept, think of it like this. Now eventually what has happened over here is that your Japan, think of it that you went to buy a house. The bank said, okay, I will give you a loan at 0%, right? But that 0% loan is spread across 30 years, right? That 0% loan is eventually spread across 30 years. And the main idea over here is that when you do this, and in the middle of the term, you change the interest rate to, let's say, 0% to 2%, what eventually happen over here is that it becomes very difficult. It becomes totally difficult for you to actually, because now you have to pay some extra amount with it, right? You have to pay some extra amount because of the EMI interest rates or something like that. Now, if Japan does this, the debt which the Japan government own, maybe to any private investors, to banks, or so on, they will become more expensive, right? They will become more expensive, and that could trigger a global fall of the bond market. Like, not the global fall of the bond market, I'm sorry, the fall of the Japan bond market. And that could cascade down to the entire emerging economies, or maybe, and since they are the largest asset holder of the US, and why not USA itself? So this is just not a simple thing which I'm talking over here. This is very bad for the economic, right? This is why I wanted to say. So maybe down this line, you might think that there might be other ways. So Japan had tried to do something which is called they have tried to, short the dollars in the forex market, and by shorting the dollar, they are trying to strengthen their yen. But the every time the government tries to intervene in the forex market, what eventually happened over here is that, okay, they might have ended up spending like 30 to 40 billion dollars from their currency reserve, foreign currency reserves, and the idea is that, okay, the yen will just restore to its original price. So this was something which has happened recently. Like, the yen had actually moved to 160. The Japan government had to step in, and they started to shorten the dollars. And that's where you can see there was a huge surge in the volume surge between the trading of these uh, or the trading of the foreign currency reserves. And this is where the things started to get very interesting over this period of time, right? So eventually this happened. But what happens now? Like, what happens? So this is just a temporary relief which happens over the given period of time. It does not changes of the fundamental or the difference between the interest rates of the Japan and the interest rates of the any other like US country, right? The difference rate still stands. So Japan is sitting at a dilemma. If they cannot change the so ideally you would think that there is only two given option, right? There is only two given option right now. If you just stay as it is, then people will just pocket up the differences. If you raise the interest rates, it can trigger a bond market crisis where the debt of the country will tend to increase, and it will become more difficult for the government to repay the original amount. But if you cut the rates, let's say you cut the rate to more, then obviously people will start pocketing up the differences more, and the inflation, so inflation could it could definitely affect the inflation, right? Because raising the interest rate brings the inflation down. Cutting the interest rate raises the inflation up. So this is also bad for the economy. Think about it, right? So it cannot do anything. And for the country which is heavily relying on let's say energy requirement, it's very bad. So I just wanted to show you a brief thing which has happened. Every time the government has stepped to intervene in the forex market, eventually, there was a crash which happened in the Bitcoin, and there was a 23% crash over here, 26% crash. So you can just note down the dates, which is 29th April, 1st May, 11th July, 30th June, 30th Jan. So eventually, every time the government had to step in, because what eventually happened is that the government is, imagine there is an investor who has taken a loan in yen, right? He or she has taken a loan in yen. And when the government steps in, they are strengthening the yen. So what these investors do is that they do is that they quickly sell their foreign asset, pay back the original amount, thinking that this will actually help them saving the differences. And that's what exactly happened. People started to sell their different asset which they had hold in different areas. And you can clearly see that from 29th April, which is over here, the government had stepped in, and there was a huge volume surge which has happened over there this time. And there was a 23% fall which has happened over here. Same thing happened between the for the 1st May 2024. For the 1st May 2024, which is on the red line, which you can see over here, there was a huge volume surge which has effectively happened at this particular period of time. And the Bitcoins actually did follow from that. So that is one particular thing. So that's pretty much it, guys, which I wanted to explain you. I know this might be not a best thing because this might take actually this covers a lot of things over the different period of time. But I hope I was able to pass you down something. And the best thing to understand right now is that how will Japan handle up their uh, interest rate, right? Because that is one of the most interesting part. Right? Maybe that's why it's called interest rates. But let's not go towards it and understand how it works. But I hope the message was clear. Like, what you can put your thought down in the comments, like what should be the best sort of strategy which Japan should follow, whether they should raise the interest rate, whether they should bring it down, or like something. So it's up to you. Share your thoughts. I would love